Hey, welcome back to the weekly option. I wanted to make a video showing an option trade that I'm looking at right now. So, looking at Inovio Pharmaceuticals. Ideally, I'll start off with the chart. So right now, if you look at this red line, the red line shows you where stock is right now, right? And hanging right around $9 per share. You can see how many times this $9 region has been a level of support. So we saw it on March the 4th. You see it on January 21st, back on the 11th, back on December 30th, roughly November the 9th, September the 4th. This level, and it played as resistance a year ago, right? Very interesting. This level of $9 seems to be what the market thinks is like the low of this. So there's nothing to say that it won't go lower than that. However, I think as far as high probability trades go, that's a pretty good one. So I'm looking at the idea of buying a call spread. A call spread mostly because I don't want to spend outright money on a call option. Buying a call spread allows me to buy the in the money and selling out of the money, which essentially will finance the one. And I'm having to decide both time frame. Am I going to do it on a weekly option or am I going to do it with one of the monthlies? So we've got the April 9th time frame. Look at this 8.5, 9. You've got 93 cents versus 58 cents. So that's what, 25 cents for that option, for that call spread. And it's essentially at the money, which means that I get if it finishes above $9 a share in 2 weeks, then I get 100% return on my money. That's not bad, right? There we go. You also have, let me make sure I did that right. It's actually 35 cents. So I did the math wrong. Hey, I'm not above it. So that's 35 cents. And that means that I would actually make 15 cents on 35. So if I look at the 9.5, because I do expect this level to be a bounce, that is actually 23 cents. So that's more of your 100% return, a little better than that because you get 27 cents out of that because we know this spread is going to be worth 50 cents if stock prices rally. Of course, you could do the 9.10 for 30 cents, 35 cents. I actually like that because my upside on that is 65 cents. And I'm going to go back to the chart. $10 has also been a very strong range. So I would just need stock to get back there in order to see my maximum profit. However, and I'm sorry, that was that was the where was I looking? I'm all over the place. 9.5. Okay, so we've got 65 cents. I'm sorry. If I go 9.10, which makes my God, I'm all over the place. Sorry, I'm trying to knock this out before the market closes too. If I buy this, let's get rid of those little notifications. So if I bought that, let's see. So the 8.5, 9.5 would cost me 61 cents. The 9.10 would cost me 65 cents. I like the 8.5, 9.5 more, right? So why not? Let's just do one. Let's do one. Because I think that this stock can end up finishing. That we're looking at the April 9th, what do you call it? Time frame. So this is a weekly option. If I can pick this thing up for 60 cents. Look at that. They're showing a limit price of 40 cents. Do I want to? I think it'll get done if I do it for 60, which is where the market is right now. Gladly do it. Let's review and see if we get executed on that. So that is it. I'm basically just pushing on the fact that I'm saying, hey, with that 8.5, if I buy that call spread, paying 60 cents for the 8.5, 9.5. Really, my break even point is, let's see, that would be $9.15. And we're only 11 cents away from that right now. So that's not bad. See if that happens. I'll see if I get executed, but that's it for today's trade. Just want to make sure that went through actually. So just as a summary, man, my voice just cracked. Guess I'm 14 all of a sudden. Just as a summary of what I just did, here's the basically the details of the trade. So we looked at Inovio Pharmaceuticals, symbol I as in India, N as in November, O as in Oscar. Looked at a stock price at the time of 902. I think it closed at 898. I bought the April '09. So this is a weekly. This is not the monthly expiration. So the April expiration of April the 9th, I bought the 8.5, 9.5 call spread for 62 cents. So essentially, I'm buying that 8.5 call for 62 cents. Right now, at the time when I bought it, it had 52 cents of intrinsic value. So I'm really paying 10 cents to pick up another possible 50 cents of profit. So another way of looking at it. So I paid 62 cents for two of these spreads. I actually bought two because the first one took a minute for it to show that it had traded. And so I did a second one. So, hey, I did it twice. If you like it once, you might as well like it twice. And my break-even price is $9.12 on this trade. So all in, I spent 62 cents. I can make 48 cents on this trade, which means that, let's see, that 48 cents is 77% return on my capital. That's not bad on a trade where I put up $124, right? $124, I might make, what's that, $96 on it. So that's pretty good. I enjoy that kind of payout, 77%, and I'll know it in 2 weeks. We're only 2 weeks away from that time frame. So I will follow up towards probably right after expiration, and we'll know the results of that trade, all right? Take care. Happy trading.